But we got a lot of things to go over today. Big one is the initial jobless claims came out earlier today, and they were higher than expected, which this is something that Powell said he was going to start looking at closer and closer. We got that, and then we still have home buyers on strike. The number of inventory continues to grow up, the number of sales continues to decrease, and the sentiment across the entire industry is just gloomy. I guess that's just one way to put it, is just kind of gloomy. So let's hop in here a little bit and let's take a look at some of the different articles that came out this week and things we're looking at. So this one came out and stating right up there, home buyers still on strike even as mortgage rates continue to drop. What we've seen is after pushing back up to about 7.5 overall, rates have now tipped down. You can actually, if you've got great credit, 760 above, you can actually probably lock in around that 6.875 FHA. Borrowers can get even lower, maybe around 6.75. But even with these lower rates, the market's not heating up. We're not seeing sales start to peak, and we'll see that in the numbers as we delve into those for especially the Orlando area. And why is that? And it really comes down to, you still have to be able to afford the monthly payment. And when people are looking at the overall monthly payment, it still doesn't make sense. When the average income is, $70,000, $80,000, but to purchase the home and keep your debt to income ratio below that 50% with a car payment, student loans, anything like that, it still doesn't calculate. And this hit it right on the nose within this article. And that is that the problem isn't the mortgage rates. The problem is the home prices. And it's because we saw that huge increase when rates went down. And they put it in a good format in that, during the Great Recession, we saw a lot of home builders pull back, homes being built, the number of homes, not keeping up with demand. So that overall inventory of availability needed to decrease. And when rates delved down into the 2% here in 2020, 2021, 2022, and you've got all that demand because now people can afford them, the prices shot up to reflect that. But the prices shot up to reflect those interest rates, not the current interest rates. And you haven't seen the pullback that I thought we would probably see, simply because when you do the math doesn't add up for people. So that's the frustrating part with this whole thing, is you still feel that there's got to be some correction in the home pricing. There's got to be. I was out showing some homes in the Lake Nona area here in Orlando, and what I saw is you've got a house that starting out at like $959,000, and it's already dropped down to about $879,000. So you're seeing these big, huge price decreases, and the average days on market staying longer and longer and longer. So it's been frustrating. And even with the outlook of lower interest rates, Powell came out and he said, hey, we're not going to wait for inflation to hit 2% before we start cutting rates. And that's really kind of pushed the perspective, pushed the market to feel that, okay, September is definitely when they're going to cut rates. And then I've seen a couple articles, they're going to cut 200 basis points over the next year. And just like the people who came out and said that we're going to have 6 rate cuts this year, bullshit. It's not going to happen. It's not going to happen. It's not going to happen for a number of reasons. And this is what people don't look at and people don't talk about is everything that's going on economically throughout the world. Um, this past week in China, you had over 40 banks fail. Japan has come out and stated that they're going to be selling off nearly $40 billion of US treasuries. And you got China also stating that they're going to start selling US treasuries. Well, if you're going to sell off US treasuries in an already flooded market, you're going to have the yields increase. So we've seen yields over the past week since the news came out last week, and we took that nice dive down about a tenth of a point. You're seeing that we're actually kind of holding steady overall. So we're holding below that 4.20 level, and it's really kind of kept rates pretty close around that 6.875, keeping it just below that 7% mark. But we haven't seen an increase in activity. When I look at my volume of people on my webpage, I'm still down about 35% over last year on the webpage. So there's still less buyers out there than there have been previously. And either rates are going to have to drop back down into the fives, low fives, high fours for people to get excited again. And we're not going to see that appreciation, because this yield is the key to what your mortgage rates are. You follow the 10-year treasury if you want to know where mortgage rates are. Yield goes up, rates go up. Yields go down, rates go down. So that's what we're going to have to continue to keep a look at. And if foreign investors continue to flood the market, you're talking nearly $1 trillion possibly of US treasuries being put out into the market. You get $1 trillion of treasuries being put into the market, it's going to force the yields to go up, because as we issue new debt, we're competing against these other bonds that are out there. And to do that, you're going to have to force the yields go up, which is going to push the price of the bonds down. So it's a very delicate system when you're watching what's going on with the rest of the world. And it's something we have to continually keep an eye on. So, when we still look at this and we see, okay, July, they're not thinking about a rate cut at all. September, we're at 93%. So everyone's baked in. It's all baked in right now. It's baked into the market. It's already priced correctly. And as Joe said, next week, we could actually see yield, rates go up a little bit in September, because we're going to be upset that we're only getting a quarter point rate decrease. We're hoping for, people are hoping, we're going to push up a half. We're going to push up a half. And Powell's been cautious. He's always been very hawkish, and he has always stated higher for longer. They want to get this down. They want to get it back down to 3%. Well, one of the biggest issues that we had, and it showed in the numbers last week, and the inflation numbers last week, was transportation. So I did a little research, and what keeps pushing that transportation cost up? And what it is we're having supply chain stress again. And here you see that container freight rates are continuing to go up. During the pandemic, a container cost roughly about $16,000 to go from Shanghai to New York. Right now we're at $9,000, and that's at the highest level we've seen in several months, really since January of 2021. That's the highest level we've seen. So all this transportation cost is continuing to stay high. And as long as it stays high, it's one of the main items that's in the inflation calculation that is not going to allow inflation to come down. So if inflation's not coming down, the rates are going to stay higher for longer. And that's the things we look at behind the market. And what is it forcing the entire housing market to do right now? Well, The main thing is price cuts. Sellers are having to cut prices like they haven't had to cut in a number of years. On average, Orlando is seeing actually about a 35% of the inventory seeing price cuts right now. Very few things are going at list price. Very few. Most things are coming in with about a 5%, 6% on their higher end, nearly 8 to 10% decrease off the original list price. And we'll see that as soon as we hop in the numbers. So you're looking at that and you just don't see what's the catalyst to start turning the housing market around. What's the catalyst that's going to, see the volume of sales come out? What's the catalyst that's going to bring the buyers back into the market? And we don't have that catalyst right yet. A major price correction would be it. But that quarter of a point price decrease, is that enough to pull people in? Or if we sit here at in the high sixes, is that enough to pull people back in? I don't think it is. I don't think we start seeing a slight increase in sales until we can get that mortgage rate back below 6.5. And with the unemployment numbers creeping up, people start getting worried. People get cautious. Plus, we have an election going on. And people always have a tendency during a presidential election, end of August, September, October, they kind of sit on their hands. They sit on their hands because they want to see what's going to happen with the election. Even though it looks more and more like, former President Trump is on his way to a victory, you never know. You never know. And I think he would be, he'd be a good shot in the arm for the economy. I think he would walk in and try and stimulate the economy. He and Powell were never good buddies, and he wasn't afraid to basically tell the Fed to cut the crap, stop raising rates. We got to keep this economy cooking. So if you remember that in 2018, the Fed started creeping up, and Trump basically kind of said no, stop it. And they actually listened to him, which is interesting because they're supposed to be independent, but they did. And it helped rejuvenate a housing market that was starting to slow. You were seeing, again, inventory continually grow. So when you look at that overall, it's going to continue to be a soft market. It's just going to be. And as a seller, you've really got to be aware of that. You got to be aware of that. Got to get a little creative, but also price the house right. Pricing that house correctly, making sure you're getting, 3 to 4 viewings a week. So you know that, hey, I'm in the ballpark. I'm getting the viewings I need. Maybe I got just a little thing here, maybe a little thing there, but overall, I'm where I need to be. If you're trying to push the price, it's not going to work. It's not going to work. I think the biggest thing that we're seeing is you've got people who bought these homes in 2020, 2021, before the market went up. The one I was looking at for a client in Lake Nona, they bought it for $450,000, and now they're trying to get $950,000 out of it. Well, if you get 850, which is more what the house is worth, are you really doing that bad? I mean, come on, you basically just about doubled the value of your house in 4 to 5 years, actually 3 to 4 years. And this is where expectations of what you can accomplish are so important when you're sitting down with a seller. And you just got to tell them the way the market is right now and understand the numbers, understand, hey, everything's on the market longer. If something's priced right, it's presented connected, we're going to sell it quicker because people know the values now. People are smart. They're not, they've got more information at their hands than they ever have. So into this week's numbers, and we saw basically the numbers up a little bit simply because we have a full week of sales, but it's nothing to write home about. We only had 447 home sales last week. And you see here, we actually broke above 7,000 homes on the market, single family homes in the Orlando area. We haven't seen that inventory level in years. That's huge. When we broke the 6, it was big. 7 is bigger. So the inventory continues to increase. And the same thing with condos. We only had 126 condos last week. And again, inventory continues to grow. Inventory goes up, it becomes more and more of a buyer's market. I mean, we watched one, because quite honestly, condos, you can kind of sit and watch them for a couple of weeks, let the seller start to worry, let them do their price cuts, and come in aggressive, because they're not selling, they're not getting the volumes, they're not getting the showings. So they start to worry. And when you come in with, an aggressive but reasonable offer, very clean, they'll take it. They took ours, didn't even negotiate, didn't even counter offer, just boom. Oh, yes, that's wonderful. Great. And here we look at the numbers. We see our months of inventory continues to climb. We're at 3.66. And then again, on the over 1 million, they're above 6 months of inventory currently. And then the other big number I wanted to look at is homes of 500,000 to 1 million. When you take that at 2,700 and you take the over 1 million at 828, over half the inventory currently are homes over $500,000. Think about the pool of buyers you have for that. You're truly talking about the top 1% of Americans that can afford that, or people who've been in their homes for years and have the equity and can sell one house and possibly get another. But do they want to do that because now they've recreated a mortgage about the same as when they bought their original house? And a lot of people don't want to do that. So we're seeing this portion of the market, 500,000 and above, that's where that's where a lot of the inventory is sitting. That's where a lot of the inventory is. And the pool of buyers there is just extremely small. So we're going to continue to see these days on market increase overall. Then we get into here, the original list price to the sales price. Again, we're sitting about 95%. Final list to sales, 97. So there's room in there to negotiate. And then again, you get up into the over 1 million, you're actually sitting about 92.5%. So that's, you're seeing the ability to move things. Then we look at our weekly inventory. Again, we're very flat, extremely flat. 447 last month. And then again, look at our inventory. Since January, Orlando inventory has increased 30% since this January 1st. That's a huge increase. Even though we're below pre-pandemic levels, that is still a very big increase in the market. And then the same thing in the condo market. Currently, the condo market is a straight up buyer's market. You've got over 6 months, 6.4 months worth of inventory in the condo market right now. And then you look at original list to final, we're at 95%. And look at this, the original list to sales price. This is for under $250,000 condos. On average, they're having to come off $15,000. 15,000, which is almost exactly where we came in with the one we're closing in a couple weeks, is right about $15,000 over the original. So there is a lot of room to negotiate. There's a lot of room for buyers to take full advantage of the current market situation. And you need to. You need to know your numbers. You need to make sure your agent knows their numbers. And don't be afraid. Again, don't be afraid to walk away from the deals. The best deals we've gotten over the past couple months are the ones we actually walked away from initially. And that's where the market is right now. It's flat. It really benefits the buyer overall. And patience and knowing your numbers is the best advantage you have, because most agents don't. Most agents just list a house and they don't know the competition in the neighborhood. They haven't looked at the competition in the neighborhood. They haven't done a real good price analysis to know the difference between this house and that house. And you have to. And that's when you have that, you can, one, as a seller, hold your ground, but two, as a buyer, negotiate and know that you're negotiating from a place of strength. Thank you for joining us today. Any questions, always feel free to reach out to me. Please like, subscribe, and join us every week here on the Orlando Real Estate Buzz. We love coming to you and keeping you up to date on the Orlando market. Take care.